Welcome back to the channel. If you're serious about growing your wealth in 2024, you're in the right place. Today, we're going to break down exactly how to build a $100,000 investment portfolio, starting from scratch. Whether you're starting with $100 or $10,000, the principles we'll discuss are the same. So grab a pen, get ready to take notes, and let's dive in. Section 1. The Mindset Shift. Before we talk about the nuts and bolts of investing, we need to talk about your mindset. Investing is as much about psychology as it is about numbers. If you want to hit that $100,000 mark, you have to shift your mindset from spending to investing. You need to start thinking like an investor, not just someone who works for money, but someone who makes money work for them. Start by asking yourself, what is my money doing for me right now? If your answer is nothing, then it's time to change that. Setting financial goals and becoming disciplined with your investing habits will help you reach that $100,000 target faster than you think. Section 2. Building your financial foundation. Next up, your financial foundation. Before you start investing, it's crucial to have a solid financial base. This means paying off high-interest debt, credit cards, payday loans, etc., and building up an emergency fund. You can't start investing when you have debt dragging you down. High-interest debt can eat away at your wealth much faster than any investment can grow it. Once you've tackled that, aim to build at least 3 to 6 months of living expenses as an emergency fund. This ensures you won't have to dip into your investments in case of a financial emergency, and it gives you peace of mind to stay focused on your long-term goals. Section 3. Understanding your investment options. Now let's get into the core of building your portfolio, the investment options. There are multiple asset classes to choose from, but the key to building a $100,000 portfolio is diversification. You don't want to put all your eggs in one basket. Let's start with the most common option, stocks. Stocks represent ownership in companies, and they historically provide higher returns than other asset classes, but they come with more risk. If you want to start with stocks, consider low-cost index funds, or ETFs, which give you exposure to a wide range of companies and sectors. Next, we have bonds. Bonds are like loans you give to companies or the government, and they pay you interest over time. Bonds are generally safer than stocks, but they also provide lower returns. A balanced portfolio will likely have a mix of both stocks and bonds. Then there's real estate. Real estate is a great way to build wealth long-term, and it doesn't have to be as complicated as buying houses. REITs, or real estate investment trusts, allow you to invest in real estate without owning property directly. You can buy shares in a REIT the same way you buy stocks. Section 4. How much to invest. Now that you know your options, let's talk about how much to invest. You don't need to be rich to start investing. In fact, you can begin with as little as $100. The key is consistency. I recommend setting a monthly contribution goal based on your income and expenses. Even if you start small, make it a habit. Automating your contributions can make this process easier. Set up an automatic transfer from your checking account to your investment account each month. This way, you're constantly growing your portfolio without having to think about it. Section 5. The power of compound interest. One of the most powerful forces in investing is compound interest. Simply put, compound interest is the process where the interest you earn on your investment starts earning its own interest. Over time, this snowball effect can make your portfolio grow exponentially. Let's look at an example. If you invest $5,000 today with an average return of 7% per year, after 10 years, that investment will be worth over $9,800. But if you let it ride for 20 years, it could grow to nearly $20,000 just by sitting there and compounding. Section 6. Avoiding common mistakes. Let's talk about some common mistakes that can set you back on your journey to $100,000. Text pops up on screen as the narrator mentions the mistakes. Chasing short-term gains, timing the market, falling for get-rich-quick schemes, not diversifying enough. First, don't chase short-term gains. This is the fastest way to lose money. The stock market fluctuates, but over the long term, it generally goes up. Timing the market is almost impossible, so focus on consistency and long-term growth. Section 7. How to scale your portfolio. As your portfolio grows, it's important to keep an eye on your asset allocation. Over time, the percentage of stocks in your portfolio may grow as their value increases. so you may need to rebalance your investments. Rebalancing means adjusting your portfolio to maintain your desired risk level. If your stock investments grow too large, for example, you may want to sell some of them and buy more bonds or real estate to maintain a balanced risk profile. So, there you have it, the steps to building a $100,000 investment portfolio from scratch. Remember, it takes time, patience, and discipline, but if you stay consistent, you'll see your wealth grow. Start today, keep learning, and stay focused on the long term. Thanks for watching, and don't forget to like, comment, and subscribe for more financial tips and strategies. Let's make 2024 the year you take control of your financial future.